Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better position your portfolio for the rough ride ahead. As I've been speaking and talking well over 6 months now, and I talked about a double-dip recession probably well over 9 months ago, I think one of the things that we're seeing within the general economy is what we call the old bounce off the bottom. When we saw over a 50% decline in almost all the major stock market averages back in 2008, when it finally bottomed in March of 2009, you had a horrifically low point in the stock market. Anytime you see drops in the stock market up 40, 50%, often what you're going to see is you're going to see a significant bounce back up. Now, we never did reach those old highs in the S&P. In fact, we were well off 15% from the highs we saw back in 2007. So the market basically was up. It dropped over 50%. It's basically recouped a good chunk of those losses, not quite to the top again, and now we start to see some rollover effect of that. This is a natural occurrence typically in a very, very weak economy. As I've talked so many times, this economy recovery is extremely weak. The government has thrown billions and billions of dollars at the market. In fact, in one of my recent newsletters I wrote, it cost an average of $850,000 per job that was created by the U.S. government over the last couple of years. $850,000 per job. That is horrifically poor. This is the slowest recovery ever as far as I look back, and even in the Great Depression times, of a recovery coming out of a major recession. The government basically has spent a lot of money and created a lot of debt. This is going to further deter any significant growth, in my opinion, of the U.S. economy and of the job market. So what does that mean to you? It means an extremely slow recovery. I'm looking at all the numbers that have come out in the last week, the ISM, the PMI, all these different numbers, the ADP report yesterday, and basically they're all saying the exact same thing, which I told you well over 3-4 weeks ago, which is things are slow and they appear to be getting slower. As I made a comment earlier on in some of my other videos, we have raised cash. In fact, we're at the highest cash level and within our client managed accounts that I've really been in probably the last 1.5 to 2 years. What does that tell you? It tells you that we are basically making appropriate moves for our client's portfolio. I hope you're doing the same. If you are a buy and hold investor, unfortunately I feel you will get hurt badly on any significant downturn in the U.S. economy or the stock market. If you've ever been told, hold on, things will come back, what that tells me is your money is not being managed. You're dealing with a broker and you have no investment strategy. Right now, risk management. What is your risk management strategy in a down market? When do you sell? When do you protect your retirement, nest egg, and life savings from complete disaster? These are the most important things within a portfolio. A, an actual investment strategy in writing that you're following. How do you manage that money? What is the strategy? And part of that strategy, B, is your risk management within a down market. And down markets could be the bond market, it could be real estate, it could be oil, commodities, gold, the equity-based markets in the U.S. or emerging markets. So bottom line is, when do you sell an asset that is getting risky and it's on its way down and having a negative market trend indicator? Across the board, my short-term, intermediate, and long-term market trend indicators are still positive, although my short-term is getting close to a sell sign. What I'm telling you is this. We look closely at all the data coming out. I look at a slower summer months, coming through the U.S. economy. I believe what we've had is we've had this big bounce off the bottom, nowhere close to where we were in 2007. What I'm looking for is any kind of significant rollover, further weakness in the U.S. recovery. If that happens, we've got two scenarios. Either A, the U.S. government does not come in and do another QE3 or quantitative easing 3, or B, they come in and actually do that. If that starts to happen, I could see another leg up in the U.S. equity markets and certainly within the emerging markets. Now, I want to bring up one other important point. It's called 5.4 billion people. There are 5.4 billion people in all the emerging markets outside the U.S. What does that mean to you? One of the things that I've talked so many times in the last 3 years to all my radio listeners is you want to be where the growth is happening and where it's most likely to occur over the relative long term. The emerging markets has 5.4 billion people who basically have lived almost in poverty type situations. These people want to grow their paychecks, which they're doing. They want to live better, which they're starting to do. Over the next 40, 50, 60 years, I could see the emerging markets greatly overtaking the U.S., obviously not only in growth, but also quality of life. So the bottom line is you're taking the U.S. 80 or 100 years ago. That's what you see in the emerging markets. If the emerging markets or international investing is not a significant portion of your equity-based or even your debt-based investment, meaning income opportunity investing, I think you're really missing out. Unfortunately, most of these so-called advisors don't actually manage your money and don't understand how these markets work. So make sure that you actually are deploying a registered investment advisor, a fee-only registered investment advisor under a money manager capacity. And remember, risk management is the most important part of money management. Do you have a risk reduction strategy built into your portfolio? If you don't, why not? That is going to be extremely important if we do go into a real double dip recession and this market drops off 30 or 40%, which could likely happen if this economy continues to deteriorate. This is Brian Resney with the Resney Wealth Report. As always, if you'd like to talk to us about managing your wealth and your portfolio in a manner that's conducive for you, call our office. We would love to talk to you. We always look to take on new clients. As you do know, we have a client minimum, and we'd love to help you rebuild your portfolio in a manner that's conducive with you and for you. Call our office at any time. And until Sunday's show, make sure you have an extremely profitable week.